Hello. Today we're going to take a deep dive into one of the most fascinating stories in the market, Microsoft. Now, this is a 50-year-old titan of technology, but we're not here to look back. We're looking forward at how this company is trying to architect its next 50 years right on the frontier of artificial intelligence. And this isn't just about some new feature. We're talking about a fundamental reimagining of the entire company. And we're going to break down the three key pillars of that strategy.
But first, we have to get the necessary disclaimer out of the way. This analysis is for educational purposes only. It is not and should not be considered an investment recommendation. Any figures or future expectations you see here are based on market consensus estimates, and it's very important to remember that they are not guaranteed.
So here's our roadmap for today. We'll start by looking at how AI is forcing this giant to completely reimagine itself. Then we'll get into the real nuts and bolts, the three core pillars of its strategy, the massive infrastructure engine it's building, the plan to actually make money from it, and the strategic bets it's placing to hedge its future. And finally, we'll tie it all together to see their vision for what they call the firm of the future.
Okay, let's start with that big picture. It's crucial to understand that this isn't about small incremental updates. What we're witnessing is a foundational shift, a strategy designed not for the next quarter, but for the next 50 years. And that really brings us to the central question that's going to guide our entire analysis today. How does a company like this, a 50-year-old titan that has already defined multiple eras of technology, position itself to not just survive, but to truly dominate the next great technological revolution? The answer, as our analysis suggests, lies in this very deliberate three-pillar strategy. First, total vertical integration, the idea of controlling everything from the silicon all the way up to the software application. Second, a de-risk way to make money by building on their massive existing customer base. And third, something we'll call strategic hedging, a really clever way to maximize their potential gains while carefully managing the risks in this incredibly uncertain AI landscape. It all has to start with the first and, you could argue, the most critical pillar, the AI infrastructure engine. You see, in this new AI arms race, everything begins with raw computational power. This is where Microsoft is building its foundational advantage. And the scale of this commitment is, well, it's just staggering. Just take a look at this chart. We're seeing capital expenditures, that's the money they spend on physical assets, projected to hit nearly $150 billion by fiscal year 26. Now, to put that in perspective, that is a 400% increase from what they were spending right before this AI boom really took off. This isn't just an investment, it's a declaration of intent.
So where is all that capital actually going? Well, it's not just one big bucket. It's a very strategic four-part allocation. Some of it goes to meet the direct demand they're seeing for AI services on their cloud platform, Azure. Another big piece is used to power their own applications, like the copilots. A third slice is for internal R&D, to develop their own proprietary AI models. And finally, of course, a part of it is dedicated to simply maintaining their vast existing global infrastructure. This chart here gives us a really clear breakdown based on market consensus. And I want you to notice the deliberate split. They are not just selling raw computing power to others. A huge portion is being reserved to fuel their own high-margin software and to build their next generation of AI in-house. It's a really calculated balance between making a profit today and securing strategic dominance for tomorrow.
Now here's another subtle but absolutely crucial strategic choice. They're focusing heavily on what's called inference, not just training. The best way to think about it is this. Training is like going to college. It's a massive, computationally intense effort that happens once. But inference is like using that education every single day for the rest of your career to answer questions and solve problems. That's what businesses actually need, and it happens to be a higher margin, recurring, and ultimately a much, much larger market.
And that leads us perfectly into our second section, monetizing the AI revolution. So you've built this incredibly expensive infrastructure. How do you actually turn that computational power into a profitable revenue stream?
Well, the ultimate vision here is a concept they call the frontier firm. And I want you to forget about simple chatbots. The goal here is for AI agents to become true digital colleagues, seamlessly integrated into human teams, able to take direction, and then autonomously execute complex business workflows. This transformative vision is the product that they are ultimately selling. So how do you sell a vision like that? This is where their most powerful and perhaps unassailable advantage really comes into play: distribution. They have 450 million commercial users already inside the Microsoft 365 ecosystem. Think about that. They don't need to go out and find customers. Their customers are already there, deeply embedded in their products every single day.
And this table just illustrates the sheer financial power of that distribution channel. Let's just run the numbers for a second. According to these market consensus estimates, even a pretty modest 30% adoption of Copilot at, say, $30 a month, that translates to nearly $50 billion in new, high-margin annual revenue. The scale of this opportunity is simply immense.
But of course, the future of AI is far from certain. Things are changing every day. This brings us to the third pillar of their strategy: strategic bets and calculated risks. How do you position yourself to win no matter which way the technology evolves?
Well, they're running what is frankly a brilliant two-pronged approach. On one hand, their massive investment in OpenAI gives them guaranteed access to what is, right now, the leading frontier AI model, and that secures their position all the way through 2032. But on the other hand, they are investing very heavily in their own internal AI division. This creates a powerful hedge. They get the benefits of the market leader without becoming completely dependent on them.
And the payoff for this internal AI development is twofold. First, it drives that vertical integration we talked about. By owning the models that power their own products, they can improve gross margins by an estimated 5 percentage points. That's billions in pure profit straight to the bottom line. And second, it allows them to create entirely new markets. They're targeting massive opportunities like medical superintelligence, which is a potential market that some estimate could be worth up to $200 billion.
So now, let's zoom back out and connect all these pillars: the infrastructure, the monetization, the strategic hedges, and see the cohesive long-term picture that they're painting.
You know, to really understand what's happening today, you have to look at the past. Microsoft has a proven history of successfully navigating these massive technological waves. They dominated the PC revolution with Windows. They successfully pivoted to the internet age with their enterprise server business. They came from behind in the cloud revolution to build Azure into the solid number 2 player. The AI revolution isn't their first rodeo. In many ways, it's the culmination of every strength they've built over the last 40 years.
And this quote, it just says it all. The company has explicitly stated that they are building for the next 50 years, not just the next 5 quarters. This long-term vision is what justifies those massive upfront investments we were looking at earlier. They are playing a very, very long game.
So, when you put it all together, what you start to see is this powerful self-reinforcing flywheel. The massive infrastructure spending enables new applications. Those applications, which are deployed across their 450 million user base, generate enormous revenue and invaluable data. And that revenue and data then turn around and fund more R&D and more strategic bets, which further strengthens the entire ecosystem. It's a virtuous cycle that becomes incredibly difficult for any competitor to break into.
Which leaves us with one final critical question to consider. By mastering this entire stack, from the foundational infrastructure all the way up to the end-user applications, has Microsoft effectively built an unassailable competitive moat for the next era of technology? That, right there, is the multi-trillion-dollar question.